Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, September 25th, 2025, and here is everything you need to know as the markets close for today. It was a turbulent day for the Indian benchmarks, carrying forward the bearish sentiment for a fifth consecutive session. The Sensex finished deeply in the red, declining by 556 points to close at 81,160. The Nifty was not spared either, losing 166 points to settle at 24,891, marking a drop of about 0.7%. The Bank Nifty also slipped, mirroring the weak tone across the financial pack, and ended well below key support levels, closing just shy of 54,700. Across the board, the theme was one of heightened caution, with persistent foreign institutional investor selling and global headwinds weighing heavily on local sentiment. Through the session, the rupee hovered near a range against the dollar, ending at 88 rupees and 71 paise. Although not a new low, the continued weakness kept importers and exporters on edge and amplified concerns over potential capital outflows. Shifting to stock movers, Chemcon Speciality Chemicals stood out spectacularly among mid-caps, soaring nearly 20% on heavy volumes, grabbing investor attention even in a down market, thanks to a sharp improvement in quarterly earnings and upbeat management guidance. Hindustan Copper led the metals with another impressive rally, pushing the Nifty Metal Index to an 11-month high. On the other side, Tata Motors endured heavy selling pressure, sliding further on compounded concerns after news of a cyber attack at Jaguar Land Rover. Power Grid, Asian Paints and TCS were among the major blue-chip laggards, each dropping up to 3% due to sector-wide weakness and subdued global cues. In the small-cap space, Trent and Crompton Greaves hit their 52-week lows, underscoring the risk-off mood in broader markets. Among today's highlights from the IPO space, several fresh offers, Advance AgroLife, Zelio E-Mobility, and Trualt Bioenergy, opened for public subscription. Early interest appeared healthy, though final figures are awaited as of the latest data. Technical levels were in the spotlight, with the Nifty testing crucial support around 24,800 and managing a slim hold just above that figure. The key resistance zone on the upside remains at 25,300. Bank Nifty's floor was tested near 54,500, which did not hold decisively, pointing to potential further downside unless a rebound materializes tomorrow. Traders should note, holding above these levels is vital for any near-term recovery. Among sectors, metals were the lone bright spot, buoyed by Hindustan Copper's ongoing surge. Realty and auto registered the steepest losses. Realty slipped nearly 1.7%, while auto stocks were pressured by weak monthly dispatch data and global macro nerves. IT and blue-chip financials also lagged amid sustained selling. However, murmurs persist around potential tweaks to derivatives trading guidelines, which kept capital market stocks on edge. On the macroeconomic side, steady inflation data released mid-week continued to anchor investor expectations, providing some solace amidst global volatility. Turning to commodities, silver was the star performer, clocking its best annual return in a decade so far, up a robust 56% year-to-date. Gold traded quietly. Crude oil prices experienced some profit booking after recent highs, providing partial relief to oil-sensitive sectors, while base metals led by copper extended gains alongside the rally in select local stocks. Looking overseas, China urged its firms operating in the United States to avoid aggressive price wars, a move seen as an effort to preserve the fragile trade truce and stabilize financial conditions. This, along with lingering concerns around supply chains and new tariffs, continued to cast a large shadow on Asian equities. Meanwhile, HSBC upgraded its outlook on Indian equities to overweight, helping to cushion the late session fall. From a technical perspective, Nifty is seen struggling to reclaim 25,000, which now stands as stiff resistance. On the downside, 24,750 and then 24,500 serve as critical supports for tomorrow's session. For Bank Nifty, watch for resistance at 55,200 and support near 54,200. Confidence remains fragile, and unless the indices reclaim these marks, there's a risk of extended consolidation or further weakness. Key triggers tomorrow will be global cues, FII activity, and particularly any overnight news flow from major US and Asian markets. Today's market churn underscores the importance of patience and discipline. For traders and investors, focus on gradual accumulation of high-quality stocks in outperforming pockets like metals, and keep strict stop losses on speculative bets, especially in the broader market where downside risks persist. That wraps up today's edition of What Moved the Market. Have questions or feedback? Send them our way, and don't forget to tune in tomorrow morning for your pre-market wrap. Stay sharp and invest wisely.